everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Hump Day, Wednesday, and it's November 4th, day after elections. Wow, late night last night, and probably not worthwhile when we don't have any results. So let's jump ahead. So as you can see here, we do got a couple items here on the economic calendar. We'll start off with this will be week we'll have jobs. So the first one up will be the ADP National Employment Number. Last month's report for the month of September came in at 749,000 new jobs in the private sector. The forecast would account for 650,000 new jobs for the month of October, and it came in very underwhelming at 365,000. Now, tomorrow we'll get the initial jobless claims, which has been coming in much better of late, and then Friday we'll get the Bureau of Labor Statistics numbers on Friday. That will be the one that will have the most impact. This one kind of is like a precursor to those other data here, but the Bureau of Labor Statistics will be the heavyweight of the jobs numbers this week. Last but not least, we got the ISM non-manufacturing, which is the services industry PMI for the month of October. We had a reading of 57.8 in the month of September. Forecast gone for a slight dip to 57.5, and it dipped a little bit further down to 56.6. Now, its counterpart, there was another one that comes out, market services PMI, that actually showed an increase. So we have kind of a mixed report on that, but the ISM here is a much more watched index than the market. So I guess you could take that with a grain of sand. Now, something that's not much of a report that comes out on a weekly basis, we don't really talk too much about, but this is the mortgage applications. They did increase last week. Purchase decreased a little bit, but however, the refinance increased. So we had a lot more mortgage applications than we did purchases, as purchases did drop a little bit last week. Let's jump ahead here to the headline news. Stocks are way up today, actually. Where you got election results, there was a pretty much it looks like it could be a status quo for the most part. There's Senate looks like it may stay in control of the Republicans. House, for the most part, will be Democrat, even though it looks like the Republicans did take a few extra seats in that area. And then for presidential, of course, it's uncertain. We have a couple key states that are still counting votes, and it's too close to call, and that will be the determining factor as to which president will be there. And of course, there'll probably be legal challenges, so this could be prolonged for a while longer. So that's creating a lot of uncertainty in the markets. But for the most part, the stock market is pricing it in as there's basically some certainty that we probably won't have as big of a stimulus package due to the Senate not changing, as they could control that bill. We got Q3 corporate earnings reports that are still coming up. And last but not least, we got the FOMC meeting starting a day later. Due to the election yesterday, they moved their meeting to Wednesday and Thursday. Tomorrow will give their announcement. Nothing's really expected to change in terms of the Fed, and so we'll wait and see what they have to say tomorrow morning. It'll probably be right around, I think it's 11:15 Pacific Standard Time when they finally come out with their announcement. So let's go ahead and see how mortgage-backed securities are doing and what mortgage rates are doing today. They have a huge jump here. We're way down here, touching out the 100-day moving average. But with that uncertainty in the house staying, and part of that reason was if we don't have as big of a bill, that means less debt, and if they can keep that control, and that is why yields were rising because of the increase in debt. So with that, is expected to be lower. Mortgage-backed securities jumped up a lot, and yields you'll see here in a bit did dive a bit. We broke above not only its 50-day, it's 25, and now this technical lever, we're way up 53 basis points, which translates to a much better pricing in this. We can see at least a quarter to 0.3% in the rate improvement due to this. So as I indicated yesterday, if there's any uncertainty, which I was kind of inclined to think that there will be because of the rhetoric of any legal battles on the presidency, it seemed like that was going to be a given result. So anyways, let's move on to yields. Yields are way down as well, as I mentioned. It dropped about, as you saw here, it broke above a technical way up here, almost like 0.9, and now it's down, testing its 25-day moving average, broke below this technical level, and now we're down to about 0.77 right now, back into the range we saw a few weeks ago. All right, so that's pretty much the gist of it today. As you guys can see, rates you should see a nice improvement in mortgage rates today, which is obviously good news for those who are in the process of refinancing or looking to buy. If you guys are looking for information in regards to any mortgage programs or got questions about the process or refinance or more purchases, stay tuned. I will leave a link at the end of the video as well as in the description. I am a loan officer and work with a national lender, so this site will give you some information, like different loan programs and stuff. If you guys don't have that questions, or if it doesn't answer your questions, please feel free to reach out to me. My contact information will be on that website. You can reach out to me, and I'll be more than happy to answer any questions. We can help you out, answer for you guys, and go ahead and hopefully talk to you guys soon. Again, we can certainly help you guys out with your pre-approvals and getting purchasing the next property, to refinancing, getting a better rate and terms, to taking money out of the properties, and setting up different strategies that you might want to use as a mortgage could be as a conduit to obtain those objectives. We can talk about those. All right, you guys have a great rest of your day. Thanks so much for watching, and I'll see you in tomorrow's video. Bye-bye.